All right. Good afternoon, good evening, everyone, wherever you are in the world. Thank you for joining me. This is Mark. Welcome to another Greenbridge Investing market analysis. This is a live stream. So real quick, the way this works is share your symbols or the markets that you'd like to see in the chat now. So once I complete my analysis, I can spend time looking at the charts that you would like to see. Okay, so in today's session, I'm going to be going over this situation with Bitcoin, talk a little bit about the US political situation because that can affect markets going forward. And also we're going to take a look at the stock market, okay? And of course, stocks that you want to see. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, if you're new to the Greenbridge Investing channel, please make sure you subscribe. Also, if you like the video, please press the like button. And also, if you can, please share with your friends. So now, we also, real quick, we do have a signal service, a swing trade signal service by text and by email. Go to greenbridgeinvesting.com, sign up for the 7-day free trial. We are going to raise our prices. So for those that lock in the prices now, you get to keep those because we're not going to raise them on customers. By the way, the 6-month and yearly packages are the ones that you should really look at now because those are very low prices that we have right now. All right, now, so let's get into this. Enough of that stuff. Today is Monday, okay? And Monday, what do? We take a look at the economic calendar. This is important, especially for Forex traders, okay? Now, this week we have like no news. Now, so we have here Bank of England, Governor Bailey, that's what, today, who cares, all right? No one cares. And then we have the price, the Chinese Consumer Price Index, no one cares, okay? So that's for today. Let's take a look at this week. What do we have going on this week? And so tomorrow, we have the Royal Bank of New Zealand rate statement, important if you're in any of those pairs, Aussie, New Zealand pairs. We're not. So there's not much for us to do here, okay? If you're in a trade like this is something that, it can change things real fast, okay? So this is one of those situations where if you're in a trade, you consider locking something in if you're in from a good price, or, if the position is against you, it's a good time to consider, what your scenarios are because things can change fast. Now, typically, these events don't really have much of an effect, typically, especially on the US dollar. Okay, so just something to keep an eye on there. I don't expect much from that. German harmonized index consumer prices, no one cares. Okay, the Great Britain gross GDP, all right, and then another speech on the 12th. So what is that, in 3 days? So what is that, Wednesday? Okay, so again, the pound is in an interesting situation. But, I'm actually at this point, there's nothing to do. Forex has been very tough over the previous month because of what's going on with the dollar. And we'll take a look at the euro real quick as well. So, and these German numbers can affect the euro, but I'm not expecting it to be a dramatic move. But the euro is positioning itself right now for a short-term short, okay? Bigger picture, it's a long. So you have to be careful. That's why I'm not a big fan of shorting strong markets. Now, on the 13th, we have Europe. What is this? GDP again. Okay. I'm not expecting a lot out of these. Michigan Consumer Sentiment Index on the 13th. And then again, this guy barely speaking again. Man, this guy doesn't stop speaking. And then we have Japan, GDP, and then retail sales, China. What is that? I guess that's on Friday. So this is not a very heavy week in terms of economic news. There's no US FOMC meeting. There's no NFP, which was the week before, okay? So again, if you're in any of these Forex pairs, just important to be aware. If you're not, then one of these, if there's any surprises in one of those news items, it could create an opportunity, okay? Especially in something like the pound. Now, so let's get into today's thing. Again, if you have any questions as I'm going through this, please make sure to ask in the channel. Also, again, if you like the video, please press the like button. I don't see any likes, so I guess no one likes the video so far. All right, now let's begin with Bitcoin, because the title of this is waiting for a retrace, right? I mean, that's what, or waiting for better prices. What does that mean, better prices, and why? Well, if you read my article yesterday on TradingView, I was talking about this potential continuation pattern long, which was right here. And I said, you know, if it takes out the high, which it has, that's actually a buy signal, okay? But it's a buy signal that we are not interested in. Why not? Because these prices are technically in an area where the risk of retrace is too high for our strategy. So we're not going to take the risk, okay? Like I've pointed out, there are many occasions when low probability trades will pay off. Those type of trades, they reinforce negative behavior. They reinforce bad habits. So you think, oh yeah, it worked that time, I'll just do it again. And over time, taking low probability trades can be very costly, okay? I'm sure many of you know. So I don't care if it runs to 20,000 from here, which is not likely, especially in a straight line. But if it pops up a couple of 100 points, I'm not interested because the risk is too high. So the point here is no matter what goes on at these levels, if it's low probability, it's no good. Those are the rules that we follow. That is what governs our decisions. In the month of October, we had 2 Bitcoin trades. We are out of those trades, and we're waiting for a new trade to get back in. Someone had asked about a short, saying, hey, is, you know, any good levels to get short? We don't short Bitcoin. And we're not going to start shorting it now. Bitcoin is strong. There's no question it's strong. So we're not day trading this thing. If you're into day trading, then that, you know, a short would be more appropriate, or at least looking for one would make more sense as a day trade. But if you're not day trading, or if you don't know the difference, then you shouldn't day trade for one, because you're only going to have problems. Secondly, even if this thing, we don't know if this thing's going to pull back to 13.8 or 13.5. We would like to see Bitcoin produce such an opportunity, but it may not. It may linger here at this 14, 15, whatever, 14 and a half, 15, and push higher. It can happen. And that's where the shorts go wrong, because they're all sitting there with absolute thoughts of this thing going to like 10,000 or whatever the fake gurus are pushing. And that's why shorting a strong market is generally not a good idea. The other thing with Bitcoin, the reason why we're so against shorting Bitcoin or any of these type of markets is because you have to understand something. Hey, Michael, these are not regulated markets, okay? People assume, oh yeah, Bitcoin, you know, it's safe. This is an unregulated market. Even Forex has more regulations than this, which means shorting, you know, it's even worse if you know, you have even less in your favor. That's why we don't bother, all right? So there's a number of reasons why we don't bother shorting something like this. The altcoins, again, they're unregulated. So we go with where the strength is. Structure has been telling us that this thing has been strong. No reason to short this thing. So even if it pulls back a little bit, like I said, we don't day trade. Now, this thing pulls back into this 13.5 area, 13.8 area, something like that, and gives us the support and gives us the structure and the setup that we want to see, then we'll be interested in a new swing trade long. You have to understand something. Good trades, high probability trades, okay, because there's no such thing as 100%, but high probability trades begin with a plan. They begin with an idea. They begin with preparing, not reacting. We don't react. Okay, we prepare, and right now we're preparing for 13.5, 13.8. That's what we want to see. If the market does not want to deliver that, which is very possible, then we adjust. Adjusting is not reacting, right? At this moment, we know that the risk is too high, and there's no reason to be buying here based on our rules. We trade rules. We don't trade anything else. I don't care about news. I don't care about what's going on in the world. I don't care about any of that stuff. I have rules, and either the market fulfills those rules or it does not. It has to be that simple, okay? Anything else, you're just gambling. Okay, so that's Bitcoin. That's the Bitcoin situation. Many altcoins. Now, the altcoins are mixed, okay? Let's take a look at a couple of these altcoins. We had some questions about Link USD, for example. Chainlink. Is that the wrong one? I typed in the wrong symbol here. Chainlink. And this is, all right, hold on. Yeah, I see TradingView has changed the default, the exchange that I was getting the data from. Let's go here, link USD. All right, let's go to, let's take a look at, I think Bitstamp has a reliable chart. No? Okay, man, I used to have reliable charts here. What's going on? There we go. I guess they're following suit with all the mainstream news organizations in this country. Unreliable information. Anyway, all right, so something like Chainlink. People are asking, is this a good time to get into Chainlink? Or what do we think of Chainlink? Chainlink is not relatively strong. That is what the chart is saying. So Bitcoin pushed 16,000, right? Basically tried to push 16,000, and it's lingering at some pretty significant highs. Chainlink and many alts that are in similar situations, Chainlink is fooling around at a resistance and potential failed high area. Why would we buy Chainlink? This thing sucks, okay? It's relatively weak. So that's the problem with something like this. I don't want to take risk on something like this. It's not worth it. It's relatively weak. All right, when I see stocks doing similar stuff, I'm not interested in them. All right, you're asking for trouble by getting involved in something like this. Now, some random news comes out and changes things, okay. But based on this chart, not a good time. This is not a good thing to get into. What about, let's take a look at something like Litecoin, because Litecoin has been more, has been participating more in the Bitcoin rally, which it should, okay? Now, here's the thing. So when you look at some of these levels here, all right, you have a support there, okay? You have a higher low, okay? This is a higher high attempt, okay? Back to a range high area. Now, this is a much different looking chart than Chainlink. Would you agree? Because this thing, at least, you know, Bitcoin is near a high and Litecoin has made an attempt. It's at least a little stronger. Would I buy Litecoin now in this price range? No. I'd wait for two things. And so I'm giving you this example so that you can compare alts that you're interested in and see which chart they're more similar to. So here, again, you're near a range high, all right? You're near resistance. Why would you buy near resistance? So either this thing pulls back and tests a support around that $50 level, or it breaks out and pulls back and tests this old resistance as a support, and those are where the higher probability opportunities are. Chasing, like I said, reacting to information, like as it's breaking out. A lot of people like to buy into those thinking, oh yeah, right, because they follow some fake guru. Next thing you know, it fails. And then, and then you go to your fake guru and you ask, why did this thing fail? Oh, you know, it's just the market. I don't know. My oscillator said to buy, and it failed. So, but anyway, I got out. I don't know about you guys, but I got out, you know, a long time ago. Right. Thanks for letting us know. So that's the situation there, right? You're best waiting. So Bitcoin is the leader. Bitcoin is still the leader. This thing is strong. Hey, HS, nice to see you. DJ, nice to see you. All right, so that's pretty much where we are with the coins. Let me just take a look at XMR real quick, because this one has been an outperformer, okay, relatively strong, unlike many of the altcoins. And as you can see, this one has a support that's in this area here, basically the 110 area, basically around there, 105 to 110, and it's trying to hold. So if you're going to buy an altcoin, this is probably one to keep on your radar. Maybe not exactly at this price, but this one at least is performing more in line compared to others. Okay? So let me know if you have any questions about those. Now, let's take a look at, let's go to the stock market real quick. Let's see, how am I doing with time? Okay, not too bad. So let's take a look here at the stock market. So we're going to begin with NSX USD. This is the NASDAQ 100 CFD, which is a representation of the NASDAQ. Look at today's candle. I'm going to make this really big for you to see. Look at today's candle. Who can tell me what that is? What is that? I mean, Michael knows, HS knows, DJ knows. You know, if you're new, you may not know. but who can tell me what that is? And who can tell me why I would be interested in such a candle? Let's see if you guys know, because this can lead to a swing trade idea, either tonight or tomorrow. I'd send something like this out. Who can tell me? I'm going to wait for you guys to respond. Guys and girls, who can tell me why that is so interesting? Let's take a look at the range low here. 943 is the low. It's today's low. Okay, so you guys are calling it, right. I'll say Shajin, that's technically what it's called. Yes, but there's a general name for this. Right, Michael got it. Pin bar, failed high. Pin bar, right? Now why is that pin bar important? Because and pin bars can appear anywhere. Right? Pin bars can appear randomly. So it's not only the pin bar that's important, it's the location that's important. Location. You see this? Location. You see this blue box here? That was a notable resistance area and initially blew through it, followed by selling activity, right? We actually took a Q's position short in this area. It was actually based on this pin bar. And here we are again in the same area, developing the same signal. Now this signal is not official yet, but it's there, okay? And we're closing what, in 40 minutes? So we have the range high, it's failed, and we have a bearish pin bar in an area where it's within reason to anticipate a bearish pin bar. Now, here's the interesting thing. So that's a potential short signal, okay? Obviously, we want to see how that closes, but again, this is likely to close looking like this. But there's a little conflict here. Let's take a look. The S&P, what's up with this? This is a conflict, all right? Now, these things should be moving together. This is not a bearish pin bar. This is a strong candle. Now, it gave back half the move. Now, keep in mind, we had a lot of nonsense occur between, today and Friday. But the S&P is still in a location where selling activity is likely. This is a vulnerable market. Even though today's candle looks spectacular and the Dow is up 1,200 points and all this other nonsense that they're celebrating about, there are some hidden uncertainties that are being ignored. Okay. Now, if there's ever a time to demonstrate the unreliable nature of mainstream news, this is the time, because the stuff that they're pushing out about like the election that occurred here is so biased, and I watched someone who had a very good description of such a situation, and the description, the word that he used was appalling. That's a great word, appalling, because this is not about whose side you're on, okay? This is about the right that we're supposed to have in this country to vote and all this and all that, and it's actually being taken away. That's a serious problem, no matter what side you're on, and that's what's being ignored. So the reason why I bring that up, I'm not going to sit here and talk about, constitutional law, but the situation is this. There's a lot of uncertainty that can occur throughout this week or even in the next few weeks. Now, we have the holiday coming, okay? We have earnings coming. So those are all potentially positive catalysts for the market. And, the market's in a strange situation here. So if there is some more uncertainty, what if this, supposed president that we have now, this new president, what if the Supreme Court steps in and says, oh no, there was a mistake? Okay, what if that takes place? So that's still a possibility. I don't know how the market's going to react to that. We could sit here and talk about logic, but as we know, logic is not the way to consider markets. Now, so again, my focus is on location. And even though the S&P doesn't have the setup that the NASDAQ has, all right, it's the location. Now keep in mind, the S&P and the NASDAQ, they should be looking the same. So the fact that we have a mixed market, okay, here's the SPY. Now, so DJ is mentioning the spider chart. This is in a failed high location, but you see, the spider chart is not very reliable as far as signals go. And the reason why I have to say that, the levels make sense, right? The levels, but you can't go by this because this is not a 24-hour chart where the SPX is this is a 24-hour chart. So that's why it's complete, and that's why it makes a lot more sense. So I wouldn't go by that SPY chart. I would go, this is the spider chart. I would not go by this chart. It can be misleading, or it doesn't show the complete picture. I would use the SPX USD, which is the CFD, which is more representative of the futures. And again, my point is this: vulnerable location, no setup. We take a look at the NASDAQ, vulnerable location, setup. So it's a mixed market, and often they're supposed to follow each other. So if there's weakness in the NASDAQ, all right, that means that the major tech companies that comprise the NASDAQ, because it's only the FANG stocks, no one cares about the rest of the companies, which a lot of them aren't doing that great. It's just the main ones. If there's weakness there, right, that's going to knock the hot air out of the S&P and the Dow. Okay, so I wouldn't go by all this nonsense that's going on today and why they're trying to justify this and that and whatever. Go by the levels first. And we have a conflict, so I would be open to shorting this, the NASDAQ. I would completely be open to shorting it, even though the S&P does not agree. I don't need the S&P to agree, because if the NASDAQ is going to act relatively weak and this thing eventually pulls back, like the NASDAQ could be the thing that pulls everything back, and then these things will follow. Okay, even if we go back to the middle of the range. So I just wanted to point that out. Now, another important aspect of all this, why am I spending so much time with these major indices? I mean, who trades these things anyway, right? Who cares? Well, they're important because they are the gauge that we use to time our stocks. So if the S&P and NASDAQ pull back, and the NASDAQ looks like it's giving that sign, then many stocks are going to follow. All right, like, so for example, let's take a look at something like Square. Look at Square. This is a stock that we're very in tune with because we've had some good trades in this thing. This is not a great looking chart. Okay, so you have an inside bar here off of a potentially failed high area, takes out this low. There's your NASDAQ weakness, right? This is going to be a reflection of the NASDAQ. People that are involved in things like Robinhood, they're not going to pay attention to this. They're going to just be like, oh yeah, it's going higher, and they're just going to buy into something like this. But this is a very, very risky area to buy. Now, let's just take a look at let's take a look at a leader, right? Square is not a leader. Let's take a look at a leader. Amazon is a leader. Look at Amazon. Look at this, right? Now, so Amazon is basically the NASDAQ, right? Amazon and Apple, right? This is not exactly, Amazon is not at its high. Amazon gave us this candle today. All right, which is, I mean, it doesn't really mean a whole lot, but the point is, where's the strength here? All right, Amazon is not at an attractive level for a long. What does that tell you about the NASDAQ? Let's take a look at Apple real quick, right? So Apple is near a resistance, right? Closed today minus what was closing at minus 50 cents. Okay, no big deal, but there's no strength here. Where's the strength? We're near a resistance. Now, if we get strong over the, going into the rest of the week, okay, fine. But until we have that, I have to be suspect here. Okay, so just to keep your eye on the leaders. Now, so those are the main things I wanted to point out. A couple of stocks too, since we're talking about stocks, and then I'm going to get to your questions. So please ask your questions. I didn't look through the chat yet, but let's take a look at a couple of stocks that we've gotten involved in recently. Groupon. What's today's high in Groupon is 26.42. Okay. Target 1 on the trade that I sent out about a week and a half ago was 26.50. Can you believe this piece of garbage missed target 1 by just a few cents? I don't know if anyone's in that, but if you managed to get out of that near target 1, great. That was the right thing to do. These things are hard to babysit. That's why we just put the target in there and see if the market reaches it. We're still in this thing, and so officially for us, target 1 has not been reached. But it came within a few cents. Okay, so nice. That was after their earnings that they had, what was it, on Friday or whatever? Nice job. I mean, this momentum may carry a little further, hopefully, and at least get us out of target 1, at least get us partially out. Another one, We had Andrew send out a bunch of trade adjustments today. And there was another one, too, that I wanted to point out. Adverum reached its first target, was another trade that we had on. So now let me point out this one, DocuSign. Okay, look at this. Now, for those of you that may remember, this is trade of the week. This is trade of the week from the previous week. And this thing is technically active now. Now, when I sent this thing out on Wednesday, very early on Wednesday, it was here, okay? Here. You see this candle? Actually, it closed here. The high was 209. It closed at 208. I put the order at 205. The next day, it gapped here. We weren't going to chase it. I put a limit order below the market. Would you believe that limit order filled today? All right, this thing has a low of 198.91. And the limit order, as you can see, was at 205.5. And what's the low on this thing? 198.91. Right, so this thing has just a few points before it reaches that stop. Look at how this thing moves. So that's why this is a great example, a great lesson on why we use those limit orders below the market. What if we were like, reactive Robinhood traders, and what if we bought into this candle here chasing this thing? That would have sucked, right? That's why we use limit orders below the market. That's why I sent it out that way. Now this trade may still stop out. There's nothing bullish about this candle. So, hopefully it doesn't reach that stop. But that's the risk that you take when you use limit orders below the market. That's a chance you take, that it just goes straight to the stop. And it's good that you use a stop. If it goes straight there, hey, you know what? Be happy that you got stopped out, because this thing could go a lot lower, right? And there's no reason to take that kind of pain or that kind of loss. So just something to keep in mind when we use limit orders below the market. It's a very important lesson. There is risk to them. Now, it's nice if it doesn't stop out, then we have a much better price than what this thing was presenting just a week earlier. All right, so just wanted to point a couple of those out. DJ mentions Blink. Right, this was another one. This is another one. I don't have the levels on this one, but I believe this one went, this thing go to its first target? There was Blink. Another big one was Palantir, PLTR. This was a big winner, okay, that Andrew called. And I mean, look at this. Now with this, I mean, this is a time to probably, if you're not out of 2/3 of it, you should be, because this is not a good candle, right? This is what a sell signal starts out like. Okay. Anyway, so I just wanted to point out those were a few recent trades that Andrew had sent out, and they, this one was a nice move there. But as you can see, when something goes vertical, you want to capitalize on that, not chase it. If you're in it, you unload into that. At least something. You don't sit there and buy it, when it's vertical. And this is another example as to why. All right, so those are the things I wanted to go over. Let me go over your stuff now, okay? By the way, if you're new to Greenbridge Investing, I just have to say this real quick. Make sure that you register for the YouTube channel here so that you get a notification every time I do one of these. And if you can, please press the like button if you like the video that I'm doing. And if you can, share it with your friends, that would be helpful. Also, we have a swing trade signal service by text, by email. Go to greenbridgeinvesting.com. Check out we have a 7-day free trial. Now, I highly encourage you to do this. We have 6-month and yearly packages. Test it out, see if you like it, because we're going to be changing our prices. And right now, you're getting the low prices right now. So we're not going to raise our prices on customers. We're going to raise our prices once we raise them. If you don't have the membership, well, then you're going to be stuck with the new prices. Now, real quick, I just have to say this too. The reason why we're focusing on the 6-month and yearly plans is because the way our strategy works, the only way you're really going to benefit is by being in this with us for at least 6 months. As many of our members know, I mean, many of these people, Michael and DJ and Alice and many others, Fonz, Irina, I mean, there's a whole group of others that have been with us for at least 6 months, and they've benefited nicely. The reason is our strategy is a swing trade strategy, and we have a portfolio strategy. Those don't unfold a day at a time. Those take time. And, if you join like 1 month, and we may only have like one Bitcoin trade or something, and it doesn't work out, you're like, this sucks, I'm going to quit. Okay, these guys don't produce any Bitcoin trades. Meanwhile, the next month we have 2 or 3 that work out, and you missed that because you didn't give it a chance. So that's why we're doing that. All right, just so you know, I want to make that clear. So that change is going to be happening very soon. So take advantage of it while you can. Try our 7-day free trial. See what you think. All right, now let's see what we have here. I'm going to go through the chat. Beginning with Shervin. Could you please look at EOS, USD, and gold? Yeah, let's take a look. EOS, USD. All right, so this is going to be, again, in the altcoin category. And see, with altcoins, we've been saying this all along. Bitcoin is your leader. If you're buying altcoins, basically it's just one big Bitcoin trade. So if Bitcoin is the leader and your altcoin is not doing anything spectacular while Bitcoin is, that's problematic. That's relative weakness. That means money is not flowing into this. All right, now keep in mind, institutions now are highly involved in Bitcoin. Institutions are not putting their money in these garbage coins. That's probably why you're not seeing much of a relationship anymore with these. So many of these are just going to go to zero, because if no one's buying into them, it's only how much more they can keep their hype going. Because all you're doing is really paying the developers to drive fancy cars. They're not solving any problems. So that's the fundamental side. All right, so let's forget the fundamentals and look at the technicals. You have a support here at $2.34. But I bring up that fundamental argument because with Bitcoin near important highs, I mean, pushing 13K, pushing 14K, that was pretty significant. This thing hasn't even pushed $2.80, which is its recent resistance. So you may be range bound here. And while Bitcoin's pushing major levels, this thing is not. Sign of relative weakness. I don't like it. Okay. Where is this thing? If Bitcoin goes to 20K, what's this thing going to do? Go up 10 more cents, 15, 50 cents? Who cares? The opportunity is not here. If Bitcoin pulls back, and that's the more important question you have to ask, where is this thing going to go? Is it going to go back to $1? I mean, technically, that's what it's telling us it wants to do. Now, let's do a little comparison. Back here, right, this is back, see this price back here? That's when Bitcoin went to 3,000, okay, back here, back at the March lows. And Bitcoin recovered, right? And this thing tried to recover along with Bitcoin. So this chart going up until August here looks similar to Bitcoin. You notice that? Take a look at the Bitcoin chart, and then you take a look at this, it looks similar. So that's what was acting more in line. This is not similar at all. Okay, so you have to ask as to why. If you're not in this thing, I would wait until this thing starts breaking resistances at least at 280, and then start looking for longs. Also, with altcoins, you're better off playing the long term, okay, investing, not swing trading these things, because especially if they're behaving like this, swing trades are going to they're not going to be very eventful, and there's not going to be much follow through, because what needs to change in many of these coins are the fundamentals, right? That's why money is not flowing into these. When you have something that money's flowing into, the charts will then offer more reliability, because we're measuring the footprints that money is leaving behind. Okay, and here there's no footprints here. So just something to keep in mind. All right, that's what I think of EOS. Thank you for bringing that one up. Now, gold. Gold's an important situation. In fact, I didn't talk about the euro. I wanted to talk about the euro. So maybe I can use this as an opportunity to talk about the euro as well. Now, gold faked everyone out. Andrew, if people that were in our chat room on Friday and Thursday, I don't know if you remember, Andrew specifically mentioned gold. And he said, typically when gold looks obvious, it's usually a fake out. And he wasn't interested in gold. And he's an expert in gold, by the way. He wasn't interested in gold until it was, in the 1850s. Well, look where today's low is 1850. This thing pulled back 100 points. All right. Now, obviously, dollar weakness, whatever, we could talk about the reasons and economic this and economic that. But the point is, on Friday, this thing looked like, oh, gold's going to break out. Oh, gold's going back to 2000, blah, blah, blah. Cannot chase these things. Now, this is a very ugly candle. The question that we have to ask is this momentum going to continue? All right. We don't know at this point. We have to see how it behaves. Now, are we at an attractive level for longs? Yes. 1850, 1840, which is the inflection point that I have here on the chart. 1840, 1850, 1860, great level for longs, okay? Whether it's bigger picture or smaller picture, great level for longs. But the momentum is not in their favor. So not a good place to step in front of. All right, you understand the difference? We have a location, but we don't have the setup. So this momentum can continue. And that's what you have to watch out for. Many will step in front of it saying, oh yeah, it's a good price, so I'm just going to get in. Okay, but if this momentum continues, now you're caught in this thing. So that's what you have to wait for. Waiting for the momentum to turn means you're not going to get the best price, but you'll have at least a better chance of it going your way if you're looking to buy. So I would have this, I'm going to be watching closely on gold because I love the location for a long. There's just no reason to get in just yet. This is the same as when you short something that's at a level like a resistance and you're like, oh yeah, it's a resistance, and you step in front of it and then it just keeps going. Like the NASDAQ back in August, right? It had a resistance, we stepped in front of it and we managed to get out of that one, but it just kept going. I told Andrew, my God, I think that was a little early, and it just kept going and going and going. You can't step in front of a level, all right? The levels they can be random. We need confirmation. We need a setup and we need confirmation, and we need to be able to measure risk. We can't do that here yet. Now, has the fundamental situation changed to where, gold should be going lower? I don't see why the US dollar will be getting dramatically stronger. I don't know what the argument is for that. This is a pretty big move for gold, but I don't know, I don't understand that situation. So I'm not going to let that distract me. Forex and gold, you're going to hear a lot of economic talk. Markets are not rational. Keep that in mind. So gold is just going to react to whatever. Focus on the levels, focus on the setups. Don't get confused by all the talk that's going to come out. Now, the key thing is, are they going to continue to print money going forward or not? Okay, if the Federal Reserve is going to continue their stance and not raise interest rates, then gold is going to reverse and go higher, because that's what fundamentally it's positioned to do. If they change their mind and they say, okay, we're going to start raising rates and blah blah blah, and the dollar is going to get stronger, then gold, the party's over in gold for a while. Okay, so just something to keep in mind there. That's what you should be looking out for. I have no fundamental opinion really on gold. I just go by the charts and pretty much the general, what the Federal Reserve is doing as far as their monetary easing or monetary tightening, right? That's really what you have to pay attention to. And bonds can also help you get an idea of what they're doing with that. All right, anyway, so that's that. That's those two. Thanks for asking. Wow, I spent a lot of time on those. All right, let's see what else we got here. So thank you for asking that. Going through the chat here. What's my opinion on OMG? All right, good question. OMG. So this one, look, we had that action back in August. Everyone got all excited over it. Of course, I came out back then. If you go to my trading view, you can read my articles. I said, don't be buying this thing up here. And it's been garbage ever since, right? It's pretty much out of favor. Now, again, altcoin, just like the other altcoins I talked about, there's no money flowing into this. This is going to take a news item to get this thing going, obviously. It's a gamble. Okay, if you like what they do and you're into this, can we measure risk here? The answer is yes. $2.68 is the swing low right here. That's where you're going to measure risk from. As long as price stays above that, it should at least find some reason to go higher, right? But you really need this thing to clear this $4 area. It needs to clear that to really start showing any kind of progress. Until then, you're just stuck in this consolidation. Is this a broad higher low? Yeah. Now, let me explain something. If this was a stock, like Nikola, for example, I'd be like, yeah, this is a long, okay? Because I like the basing. But you know what? Something like Nikola or those electric car stocks, they have reasons to go somewhere. They produce products that have a lot of potential. There could be potential takeovers. What does OMG do? Okay, besides solve a lot of nothing that a lot of these altcoins do. They don't have anything. They don't, not until they're proven. That's why I'm not I don't put a lot of weight into the technical structure here. But like I said, Nikola, which has a very similar structure, I'm much more interested in. Like, look at Nikola, right? Nikola looks kind of like garbage here, but I'm much more interested in buying into a higher low that looks like this because of their potential compared to something like OMG. So just something to keep in mind. Structure, yeah, okay, it's going with you, it's holding, but if it takes out those low twos, again, it's a gamble. The conservative thing to do would be to wait till it breaks that 4 area. You need some kind of catalyst to prove that this thing is worthwhile. Whatever that catalyst was back here, you need something like that to keep this thing going. But the concern is Bitcoin is pushing those highs, and this thing is struggling, to make any progress. Relative weakness. No money's flowing into it. So that's what you need to be concerned about. All right. Oleg, hey Oleg, nice to see you. Okay, so let me go through the chat here. Okay. Okay, we looked at the SPY. All right. So DJ, let's see what DJ says here. He's watching SNL. They gave an example where they yeah, I didn't see that. But I remember that scene. I know the scene you're talking about, and thinking that they were free. Yeah, that's interesting. I'm not a big fan of that show because of their, they're just not. I used to be many years ago, but anyway, okay, Michael. At least your president for sure coming in Belgium. Right. Well, that's interesting, Michael. The thing is, and I understand, but Belgium. I don't know much about your political history, but we have this thing here in the U.S. This thing called the Constitution, and it spells out certain things. And when you go in and you change election results, that's bad for everyone, right? That's bad no matter what side you chose. It's bad for everyone, which implies a lot of, how could you trust an election in the future? And how do you know if they're reliable? How could you trust any information that comes out, when things change? So it really throws a lot of things off, in my opinion. Maybe I'm naive and I believe in, these ideal things. I don't know. But that's not how it's supposed to work here. At least not so blatantly. I'm all for, fairness. Okay. Like if someone wins fairly, hey, I'm not going to, if people chose you, okay, that's it, right? That's who the people chose. But if you went in there and you cheated, and there's all kinds of evidence that you cheated, that's not cool. Okay, that's really problematic for everyone, not just one side of the equation. Anyway, all right, so thanks for mentioning. Abdel, is it really wise to ignore macro events news given how we keep getting one bullish headline? Okay, that's a good question, Abdel. That's a good question. So the thing is, the news is biased, as we just learned, extremely biased, right? So, right, bullish headline after bullish headline, they could come out with that all they want. If those things were helpful, right, what those things do is they are a reflection of the herd. And what they do is they stimulate reaction, Abdel. And reaction is human nature. Human nature is our biggest enemy in this game. Now, Greenbridge, what we focus on planning, we focus on anticipating, and we focus on preparing, not reacting. Most of the time, I have no idea what's going on in the news. I take a look at a chart and I can tell you that something in the news came out because I can tell by the price reaction. But I'm not interested in reacting because I know that reactionary trading leads to occasional rewards. Just like when you go to a casino and you play the slot machine and sometimes you win and you think, oh yeah, I got something going on here. But it was just a random occurrence. You cannot win playing the slot machine. They just do that. They give you that little reward so that you keep coming back with hope. They fill you with hope. That's what the news, the news doesn't purposely do that, but they do that because they're in business, right? And they need headlines or what attract attention. They don't care what effect it has on the market. They're not in the market. They're not there to make calls in the market. If they're right or if they're wrong, it doesn't matter. They need viewers, right, to justify ad ad expense, right? To charge their advertisers money. So the more viewers they have, the higher the rates they can justify. And they can say, oh, look, we have a bazillion viewers, and you need to pay us a lot of money to put an ad on our network. That is all they're interested in. Bloggers do the same thing. All these content producers on YouTube do the same thing. Even people on TradingView do the same thing. They use headlines to attract your attention. Okay? They're meaningless. They don't mean anything in terms of the market. Markets are not rational. Okay? So by reading a headline and saying, oh, that's bullish, I should be bullish today, you are now part of the herd. And that will make you reactive, and that will likely put you on the wrong side of the market. Maybe not right now at this moment, but you're going to get caught with an opinion, and you're going to get on the wrong side. Meanwhile, the smart money is taking the other side of those trades. The smart money doesn't pay attention to news headlines. Okay, I can tell you right now. They have better information, for one. They don't need the news. And secondly, you have professional speculators who have learned to track the footprints because, they don't have the same resources as a large fund manager. So they have to do it in a different way. All right, so thank you for bringing that up. I know I don't want to rant too long on that, but I have a serious problem with, all this information that's put out to stimulate a reaction, especially when it stimulates you to take a risk that is unjustified. That's why so many people have a problem, and that's what the herd mentality is all about. Now, on the flip side of that, we need, in order for us to get anywhere, in order for someone to take the other side of our trade, we need misinformed traders. So the news actually does us a favor by luring more misinformed traders and misinforming them even further. Otherwise, if the market was made up of all smart money, no one would trade. Just like if you go to a poker table full of everyone that knows each other and they're all professionals and they've all been there for a long time, and you walk in because you're the tourist and you don't know any of these guys and you think you're going to beat them, they're just going to take your money. A tight poker table is tight because everyone knows each other's tricks and no one bets, right? Those tables suck. No one likes those tables. People like places like Vegas because why? You have lots of tourists. They don't know what they're doing. And you have these professionals that are sitting there just waiting for them to come in and go all in on some stupid thing because they're gambling. And that's easy money for the professionals. So in order for the markets to exist, you need uninformed money. That's the nature. That's the nature of the market. Okay? So anyway, all right, let me stop on that rant now. Let's see here. So could you please look at PayPal? Joe, let's take a look at PayPal. All right. So again, I'm not getting political, but it's important that you understand the obstacles of human nature, okay, and how these organizations look to capitalize on it at your expense if you choose to consume that information. Now, PayPal. PayPal is a market stock. All right. This is unusual for PayPal with the S&P up so much and blah blah blah. I mean, look at this. This is not good. They must have had news. Something came out negative for PayPal. I don't know what it is, but I wouldn't touch this thing here. This thing kind of looks like gold, right? Big bearish candle. No reason to buy this thing. It's not even at a great level. All right. An attractive level, which is the first place we look for a trade, is here on PayPal. That's the attractive level. This goes for every market, not just PayPal. So you're looking in the mid 170s, mid to high 170s. That's the first place. Today we closed at 186. Maybe they had earnings or something. I don't know, but something came out and knocked the wind out of this thing. So the first place to even think about a trade is in the 170s. And notice I used the word think because we don't just step in front of it. So we need to see a reversal, a setup, a bullish pin bar, something bullish there, followed by the confirmation in order for us to do anything, right? So I would leave this thing alone. I don't know if you're in it, but there's nothing to do here for us. When this thing, and this is a good example of when something like PayPal pushes highs or nears resistance highs, right? And you get a red candle, that's probably a good place to start taking something off the table if you're in it. Notice we always talk about that. Michael knows, Alice knows, DJ knows, some of the other people here, Joe, you probably know. When we talk about something that's pushing highs, what's the first thing Andrew comes out with, or I'll mention, take something off the table, take something off the table, because you're facing a vulnerable area, right? And now you don't want to get caught in this. So all you can do with PayPal is wait for a pullback. But I'm imagining minus 16 points is a lot for PayPal, especially with the S&P up so strong. I would imagine that there's a problem there. So I would hold off on that and wait for some sort of stability, at least a level or something, before even looking at it again. So thank you for bringing up PayPal. Now, or another thing is, if you're in something like this, I don't know what to tell you there. Like, if you're not stopped out yet, you have some more potential pain you're facing, at least. I can tell you that, based on what this chart is telling me right now. This thing closes in 5 minutes and it's closing on its low. Not good. Okay, not good if you're long. Okay, so let me see what else we have here. Thanks for asking. Workhorse and Nikola. All right, so now these stocks, Workhorse, right? We had a pretty nice win in this one not too long ago. Workhorse is trying to turn itself around here. We had what? We had that short put, which was called back here. We took delivery of it at 23. The short put was at 20. The strike price is 26. Our cost basis is 23. And this thing went to 15, right? So we didn't bang out of this thing because we know the potential of it. Here's the thing. It's trying to come back a bit. There's nothing to do here. You're still up against this resistance. What is this, the $20 area? You're up against that nice bullish candle attempt. That's nice. But we haven't taken out any resistance yet. Now, again, something like this, news can come out of nowhere, and next thing you know, it's up $10, right? That a chart will not help you with that. That's something that you have to realize is a possibility. Now, and that's what I like about this whole sector, the possibilities. Because again, some random news can come out of nowhere, and that's not a chart play. So at this point, with something like Workhorse, if you're in it, there's really nothing to do. I wouldn't sell it, and I wouldn't buy more. To buy more, I would want to see a pullback in some sort of higher low structure, perhaps maybe a test of 16 or something. I would like to see that. Maybe a double bottom. That would be fine too, if it wants to do that, or a failed low. Those would be the place to consider putting on more if you're willing to take that chance. Otherwise, it needs to break that 20 and then retest. Okay, it needs to do something like that. So I wouldn't do anything here, especially with the position of the stock market. Because remember, if that stock market gets ugly, this thing tends to react somewhat, right? It's not immune to those stock market sell-offs. So let's take a look at Nikola. Same situation. Nikola has been very uneventful, right? It's been trying to hold this support here, which, I mean, I like the potential in this stock. I do. Like, I compared it to the altcoins there. I'd rather buy this thing than something like OMG. But here's the thing. This price action situation right now is not exactly favorable. Okay, so the level, what is that, 1684? The level is holding, so basically 1650. That level is still in play. But the problem is we don't have price action that's compelling at all. Right? This is bearish here. Looks like we're going to close like that. It could possibly break that 16 area. So if you're not in Nikola, I would wait. I would wait before doing anything. If you're in Nikola, well, this thing, it would probably be wise to use a stop at like 14.5 perhaps. It may get stopped out, but at least you're protecting yourself in case this thing goes to 10 or whatever. Because look, if this thing recovers, you can always get back in. Unless there's some ridiculous news, something like a ACB where, they announce some kind of whatever partnership, and next thing you know, it's up $10. But again, a chart will not help you see that coming. And that's not something you're going to be able to react to either. So those are your choices. Now, from a technical point of view, I would like to see a resistance get taken out, like 23.25. I would like to see that, okay? And then that would make me much more comfortable with a long here in this thing. Even if you buy it at 23.25 on that breakout, at least you're having a resistance break and a structural change, okay, relative to a support break, which is what it looks like it's setting up for right now. Is this trend bearish? Well, the momentum is bearish. I wouldn't say the trend is bearish just yet because this larger structure, I didn't mean to do that. This larger structure is still in play. Okay, it's still in play even though this thing is almost back to where it started. I'd say it's still in play. It's just that bearish momentum has got a hold on this thing. So I would just that's how I would consider this thing right now. Like I said, and I think wasn't this one of the was this a play of the week? I don't remember. I think we're in this one. We have so many of them that's hard to keep track of. Sometimes I have to look at the sheet. Anyway, okay. So thanks for bringing that one up. I hope that helps, Michael. Right, Michael's been here. Wow, that's almost 2 years. Michael, Alice. I know Alice has been here that long. Fonz, Irina. I mean, a lot of people. Yeah. Okay. See. Yeah. Since when we used to have one trade a month in Bitcoin. Right. Wow. DJ. I don't realize. DJ. I didn't realize you were here that long. Also. Wow. Okay. Oleg. Euro. Yes. Okay. Oleg. Thanks for bringing up Euro, because I've been wanting to talk about this one. So in recent weeks, I've been talking about the euro being a long. Okay. Now, even up until the previous week, we talked about the election coming up. Even we talked about this little pin bar candle, and I said I like the euro long at the 1600s in that area, but I'm not going to step in front of this thing until after the election, if anything, because I want that to get out of the way. Not only did we have election day, ahead of this area right here, but we also had an FOMC meeting, and we also had NFP. Three major potential dollar moving events. Okay, so this was a tough trade to take. After the fact, we can look at this and say, oh yeah, you could have bought that there. Why did you buy it? Tough trade to take, right? With all those events, because things could change really fast, right? Now, since that day, this thing has just gone vertical because I guess the dollar weakness or whatever. And there was no clear trade signal since the election day. There has been no trade signal. We're not going to get into this on this type of outside bar, which I believe was election day. So we let it go, no problem. Now, this thing went as high as basically 1920. And as you can see, it's feeling the same pain as gold. And here we are back at 1812. So this thing basically pulled back 100 pips off of a range resistance. Now, you see this area, this range resistance? I'm not opposed to taking shorts, off of such an area. I'm not opposed to that in Forex. But the thing is, this outside candle is too big. Not going to short this thing now. Like, you can, but the risk is so high. You're looking at 100 pips in the euro at least is where your stop's going to have to be 120 pips higher. This isn't the pound. The pound usually has that type of risk. Not worth it in the euro. So you need smaller candles. I wouldn't touch this thing right now. And I want to really, at this point, I'd be looking for the next long. All right. So with this outside bar, I'd be anticipating bearish price action, bearish momentum, but that's not a trend. This thing has been range bound, okay, range bound within a broader bullish trend, right? This trend back here, and I've pointed this out many times. Michael knows, we talked about this with Michael. There's nothing bearish about the euro, okay, bigger picture, nothing bearish about it. On the podcast, which we have tomorrow, over these previous few weeks, even Henry said to me, all this bad stuff going on in Europe and blah, blah, blah. Why would anyone buy the euro? It doesn't matter what's going on. All right. Meanwhile, the euro went up 200 pips or whatever, 250 pips with all that bad stuff going on. So it doesn't matter. I want to see the euro pull back to perhaps the high 16s, low 17s. I would like to see that, and I'd be interested in the long. Okay. That would be a long idea. Right now, I would leave this alone because it may consolidate further. It may push higher. It's just so random here. Although the level favors more of a short, even that's risky. Okay, because you may get like a slight little pullback, and next thing you know, it's pushing 120. So I would just wait. But I like the euro generally as a long. I just need that pullback before I can measure risk effectively. If that makes sense. Okay. Like I said, the dollar is being affected by all this stuff going on, all this geopolitical stuff, and Forex has been very hard over the previous month, month and a half, 2 months. We don't have any Forex trades really. We haven't called any Forex trades because the risk has been too high, and we're not going to call trades for the sake of calling trades. If the risk doesn't make sense, we're not going to call it. All right. So, if there's something you want to do and you're interested in something, you'd say, hey guys, what do you think of if I took this thing short? We'll tell you our opinion, but we're not going to send out trade ideas and stuff that doesn't make sense. Unlike other gurus who have no problem selling action. Now, all right, so that's the euro. Thanks for asking about that. Let me see what else we have here. Okay, look up into buying solar stocks. Oh, DJ. Okay, I'm glad you bring that up, DJ. Let's take a look at the Sun Run. Okay, Run. This is an interesting one. So these stocks, right? The solar stocks, Reggie, the renewable energy, Sun Run. They had a nice run. Now they're getting a little funky here, right? This thing was higher, much higher, 61.21. This thing's closed at 55.46. That's not good. So I would wait. This is not a good candle, okay, for one. I would imagine the others look similar. Let's take a look at Reggie, right? Another solar. Oh, that's a little bit better chart, but not good candle either. I wouldn't buy anything there. What's another solar stock? Let me think of one here. Solar. Would Plug be a solar stock? No, I don't know if Plug would be considered a solar stock. Wow, look at that. That's a nice move. But I think that's a renewable energy. DJ, do you mean like solar only, or are you talking about just renewable energy? Which I guess maybe solar is a part of. Nice breakout there. Nice breakout, but wouldn't buy that. Definitely wouldn't buy it. Need a pullback. Okay. So DJ's asking, should we look into buying solar stocks if we find a good deal? If they're strong, sure. I mean, look at Plug Power. Right? That's a nice strong stock. This is a nice strong chart. Higher lows and higher highs all over the place. Today made a higher high with a push to 21.89. Okay, that's all good. Not a great place to buy now, but look for the pullback. Pullback in something like this. The first place I would look would be the middle of the range, 1735-ish, something like that. Start with a level and see how it behaves there. If it never gives you a pullback, don't chase it, because by the time you buy it, you're buying the high. How many times has that happened? DQ. Okay, let's see. Let's see what that is. No, it's not Dairy Queen. Ooh, yeah. So this one not as attractive there as something like Plug. I don't even know if Plug's a solar stock. But another energy company, double top situation here. All right, this is not exactly a good. Obviously not a good place to be buying, but general trend is strong, bullish. Double top doesn't mean that trend is going to reverse. It just means that this is not a good place to buy at the moment. So I would be waiting for a test of the range low, 167.25, something like that, maybe slightly lower if it can deliver such an opportunity. But to answer your question, DJ, yeah, I would be looking, the general stocks, the general charts are strong. I'd be looking at that. Now, here's an interesting one. VLO. Andrew talked about this one. In fact, I believe, Andrew, we bought more of this in the portfolio a week ago. Look at this. This is unusual. Okay. Pow, I believe you brought up some of these as well. I don't think it was VLO. I think you brought up another similar one, another oil-based or energy similar one. Look at that. Okay, we talked about the higher low developing. This has been a very tough market, but wow, this is interesting. You can't do anything with this now. If you're not in this, you have to wait for the next support or something, right? Which could be 5 or 6 or maybe even 10 points lower. You can't chase these things. But wow, you want to be positioned for these things, right? And portfolio-wise, we were, right? I would imagine MPC is probably similar, right? You all know, all you guys know, DJ and Michael and all your regulars, how this has been one of Andrew's favorites. MP's been talking about this thing for like a year. Look at that. Wow. Okay, so nothing, you can't chase those. Obviously, they're I guess they're benefiting from the potential decline of the oil supply based on the political situation. Real quick too, before I follow the rest of the chat, look at this. For those that follow this, look at this nonsense. Look at this. Potheads. Look at this. CGC was as high as 26.95, closed at 24.57, up $1 today. But the thing is, again, they're betting on the whole cannabis liberal blah 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 whatever. Even Kronos was at almost $9. Right? Look at this. Look at this. 880 was the high. This thing closed at 722. By the way, DJ, they filled me on that short put on Kronos because I left the order in there. They filled me. I got my dollar, but it's $1 against me now, strike price wise. I have the $6 November 20 $6 call short, and this thing went to 8. I'm like, oh man, they're gonna call this thing away, but they may not. I may actually keep that premium and not get the stock called away. Possibly, I don't know. We'll see. But anyway, again, don't chase these. There's going to be a lot of hype with these. There's going to be a lot of Robinhood hype with these because who else would be buying these things? All right, especially when they go vertical like this. Don't touch these. These stocks have been garbage for the longest time, and they're just going to improve out of nowhere. I don't know. That's why I sold a call against it because I'm trying to collect premiums. All right, anyway, so thanks for bringing those up. Let me see what else we got here. Going through the chat. I'm over talking because I'm over an hour here, so I'm over talking. But I want to make sure I answer everyone's questions. Let's see here. DJ, for new members, can we confirm? We were in a trade a week before that news came out. You're right. So I don't know which stock you're talking about there, but we're positioned before stuff comes out. The news just happens to come out, and it happens to help us out, right? Because those are potential catalysts that a chart is not going to, the chart's not going to get you into that. The chart means when we see signals on a chart, we see stuff going on a chart, often those are footprints. Those are footprints from larger players, whatever they're doing, positioning, moving money around, however they're investing their money. That's what we're watching. And obviously, they're going to have a better connection to real significant news before it comes out than any of us. So if they're positioning themselves for that, and we can see them positioning, and we don't know why they're positioning, but we can see, signs, then obviously we're positioning ourselves on the same side as the smart money. So we don't need to know the news, right? But thanks for bringing that up, DJ. Pow, I didn't read the news. Wasn't aware that votes were. Oh, well, no. So Pow, the situation with the votes is there's a lot of there are going to be lawsuits because of the voter irregularities and all but there's no proof has been ruled by a court yet. But that's what we're going to see. Now, the problem that I had earlier that I mentioned is if you watch any mainstream news channel, they're saying, oh, no, it's all over. Oh, that's all. No judges are taking those cases. Oh, it's all garbage. That's a serious threat to the Constitution of the United States. So that's why, and they're saying, oh, it's nothing. It's nothing. It's nothing. Don't even look here. But what I'm saying, that stuff can come out and cause things that, the market is not pricing in. So just something to keep in mind there. I don't want to spread any fake news, so I just want to make sure we're clear on that. There's a lot of theories and conspiracy theories, and they're saying, oh, these are fake, that's fake, this fake, blah blah blah. Okay, but nothing has been judged yet, officially. So we have to see. But there seems to be a lot of it's a crazy what's actually going on from some of the stuff that I saw. So we have to see. Anyway, all right, Savvy. Okay, so you want to look at, so we took a look at Litecoin. So Ethereum. Let's take a look at Ethereum. Let me pull that up here. I have Ethereum. All right, good questions, everyone. Good questions. Let's take a look. Ethereum. We took a look at Litecoin. We could take a look at it again if you want. So remember, Ethereum. Ethereum follows Bitcoin. Okay, so it's not on its own yet, although it's probably the second best coin. it's not on its own. It looks very similar to Bitcoin, even with this price action. So whenever you're making judgments in Ethereum, you should always look to Bitcoin first, because Bitcoin is just a smaller, Ethereum is just a smaller version of Bitcoin. That's how we look at it. It's all the same trade. So Bitcoin made some important highs. This thing has tried, just like Litecoin, which means, okay, it's in line with Bitcoin, it's following Bitcoin, so you should be looking at your signals in Bitcoin. You have an inside bar here, which it took out, that high. That's up an actual buy signal at a resistance. But again, the problem is the risk is very high. If Bitcoin pulls back, even though there's a buy signal in this, do you think this thing is going to go on its own? Probably not. Unless some news comes out and things change, this is probably not going to do that unless Bitcoin agrees with it. So I would stay away from something like Ethereum. If you're not in it and you're looking for a new trade, I would wait for a pullback of some kind, just like Bitcoin. We're waiting for a pullback and we're going to wait. This is at a vulnerable location, not attractive at all. This is a resistance. What is that? Basically the 450 area. As you could see, selling activity has stepped in before, over a month ago in this area, and they're trying again. So I would not buy it here. If you're long Ethereum from a longer period of time, there's really nothing to do here. If you're in from a lower price and a better price, I would be open to locking some in. In fact, Andrew sent out an email, I think it was today, trimming Ethereum. I don't know if it was today or Friday, I can't remember. But trimming Ethereum means taking some out of the portfolio, selling some at a high, which is the right thing to do. It may not be the top, but it's a high, and that's effective behavior. Okay, that's why our portfolio, even our coins portfolio, which started out in the red back in 2018, we started it out in the red purposely, is now green. Okay, because we were careful with how we managed that, and it took some time, but it went from red to green thanks to this nice Bitcoin move. But you don't know how much we were criticized, especially at that time. And even after that, I had these trolls like on TradingView saying, oh, if you followed these guys, you would be in the red, blah, 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 because they own it from 14,000. Meanwhile, our cost basis is like 6,000 or 7,000 or something like that. Anyway, our portfolio is green. And it was just good trade management and risk management, as Michael and DJ and everyone else here can tell you. All right, so just wanted to point that out. So that's Ethereum. Let me see, what else? POW. I think oil's going up because, right, well, that's possible, POW. I was talking about that with Andrew earlier. That's possible. They're expecting, people to be moving around again and all that stuff. And that could also be, obviously, a positive for the oil stocks, right? Because there's going to be more demand on oil. So, but either way, even with that news, okay, like here's back to VLO. Even with that news, you cannot chase these because you're just taking a lot of risk. What if this thing just pulls back? What if this thing gets ahead of itself? All right, markets are not rational. So you may see the news and say, oh, yeah, everyone's going to start moving around again and blah, blah, blah. All the demand on oil. So oil is just going to go higher, but that doesn't mean oil won't go lower first. Okay, oil can pull back or whatever. These things can pull back. And you're looking at, what is that, 42.84? This thing's at $50. Do you feel like taking that pain? I don't. So either you're positioned for this, which we were, or you have to wait for the next high probability setup, right? And that's what our strategy focuses on. Our objective is to find and wait for those high probability setups, not sell action or jump into things just because the news says so. Right? So very, very important things there. Okay, so any other questions? I think I got to everyone's questions here. Any other questions? Wow, let's see, how long have I been talking for? Talking for a while. I talk a lot, as you guys know. Where's my, oh yeah, okay. So do we have any more questions? So let's see that NASDAQ real quick. I'll leave you with this. NASDAQ closed not so nice. Okay, not good. That's bearish. Let's see how the S&P closed. And S&P pin bar, right? It was when we looked at this earlier. You all were here. We looked at this. That candle was more bullish looking, right? Remember that? The green was much higher, and now we have more of a pin bar because they can't. They can't deviate from each other for long. If one is red, that's a problem. They should all be the same. The NASDAQ, the S&P, the Dow, the Russell, maybe not the Russell so much, but the main ones should be the same. If they're not the same, that's a red flag usually. Okay? So, okay, no problem, Michael. Thanks for, I managed to get my thing done a little earlier today. So I'm glad I was able to, I know many of you are in the Eurozone, and I know it's like midnight over there, or it's close to midnight, and I appreciate you taking the time, spending the time here with me as well. Okay, so I'm leaving you with this because, again, this is not bullish. I mean, we have to, this has not created an official sell signal, but I would not be excited about longs with something that looks like this. Okay, Uber, DJ, let's do it. Let's do it. I don't mind spending a couple more minutes. DJ, I looked at this earlier actually, because I was like, I wonder how Uber's doing. I saw, oh man, you can't touch this. This is just ridiculous. But I guess they're anticipating whatever. People will be whatever. I don't know. I don't know what they're anticipating on this one. But either way, man, and I looked at this weeks ago too, because I was looking at these levels and I'm like, man, these things, they don't move. These things kind of suck. I don't know if I want to call Uber, and then I was just finding better stocks. And this is a good example where the chart was favorable, because we had a range low back here and it kept touching that support, but there's no way the chart can tell you that it's going to do this. There's no way the chart will tell you that. Like with something like this type of consolidation, I would expect the breakout, and then perhaps working its way higher slowly, like it's been, basically in line with all these other movements. But then you have this. So up here at this moment, you have a bearish pin bar. This is also one of those island reversal situations. We've been seeing more and more of these, right? When you have a sharp move like this, I would not want to be long at such a location. So if you're in Uber, great place to lock in profit, okay? Great place to take something off the table. If you are not in Uber, I would not buy it here. You need to see a pullback. You have a gap here. You have a gap here. Your support right now in something like this is back here at this price. What is that? 38 and a quarter. And right now this thing's at 48 and a quarter. So this is not a good location. So I would wait for a better location. I would wait for setup, just like everything else, just like Bitcoin, just like all the other ones. No reason to chase this thing. But the important lesson here is if you're in it, nice place to lock something in and then see if the momentum continues. Shorting something like this, it's risky. DJ, I don't know if the options are worthwhile in this. I don't know if the buying puts on something like this, a few months out, a few points lower. I don't know what those premiums are like, but that would be a very, very aggressive trade because, I don't know. At this point, this thing may not have much of a pullback, just like Roku, right? Remember Roku? Roku had the same situation, and that situation we looked at Roku was back here, and it fought to go higher. Okay, so buying puts on that would have been tough, expensive, and would you have been able to hold through that vertical candle? That would have been tough because those premium on those puts probably would have gotten cut in half on something like that, and then maybe it would have gone your way, maybe, right? But depending on how much time you have in them. So, man, look at this thing, and this thing gave it right. This thing was vertical on Friday, and it gave it right back. That's why you can't chase these things. So, I don't know what you're thinking on Uber. I don't know if you're thinking short, DJ, on that thing, but that's definitely aggressive. Okay, the conservative thing to do would be to wait for the next long. Keep in mind though that the market is in a bearish location as well, which means that pullback may be coming soon if that S&P and NASDAQ start to pull back this week. And like I said, I'm open to shorting the NASDAQ if and it looks like we got that close. So I don't know if I'm going to send that out today. I think about that, but I may send that out today or maybe early tomorrow or something. We'll have to see. All right, everyone. So that's pretty much it. I've been talking for a really long time. Do I have any other questions? I mean, before I wrap this up, because I'm going to wrap this up now, I want to thank you all for taking the time with me here today. If Again, please check out greenbridgeinvesting.com. We have the swing trade signal service by text, by email. We have a chat room. We have portfolio management ideas. We have a 7-day free trial. Check it out. See if you like it, because right now our prices are very low and we're raising them. I'm not just saying that. We are going to do it this month. Okay? But we are going to give everyone an opportunity to get into these prices that we have right now. Once you're locked in, the prices won't change for you. Okay? Once we raise our price, then these low prices that we have right now are not going to be available anymore. For example, our yearly package right now is $239 for the year. That comes to like $20 a month. Okay? $20 a month is what that comes to if you pay the year up front. That's the price right now. That price is going to be much higher soon. Okay? So just want to let you know. Okay, no problem, guys. No problem. Again, thanks for all your great questions. I like to answer your questions. Make sure that we have some clarity here, and at least you have some idea of what the scenarios are so that you could prepare and not react. All right, so thank you again, everyone. Enjoy the rest of your day, in the rest of your evening, wherever you are in the world. And I will see you tomorrow. Remember, tomorrow's the podcast, Talking Markets with Mark and Andrew. So we should be on at our regular time. Hopefully our technical situation stays stable. And I had to delete the previous show because we had problems. Hopefully that takes care of itself, and we don't have any internet problems. And check out the show tomorrow, okay? Because we're going to talk about all these things plus more, plus trade of the week. Remember, trade of the week. All right, you guys. So enjoy the rest of your day, the rest of your evening, and thank you again for watching.